Hi everyone, let's go over my cycle, macro and high time frame bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the cycle bullish scenario where we're looking for multiple 1-2s to the upside where the latest bear market is finished and we are looking for an impulsive structure to the upside in a blue wave 1 followed by another bear market in a blue wave 2 before then continuation to the upside. To get a better estimation of when the top of this blue wave 1 might be, we have to compare the previous impulses with one another. And you can see that the yellow wave 1 over here in time is a little bit shorter than the red wave 1 to the upside, as wave 1 in yellow here ended just before the 786 Fib time. The green wave 1 is exactly the same amount of time as the yellow wave 1, as the green wave 1 ended at the 1-to-1 Fib time, taken from the low to the high of the yellow 1 to the end of the yellow 2 to compare yellow 1 with the green wave 1. So with this information, we can get an estimation of the blue wave 1, where we again have the 786 and the 1-to-1 on the chart, and just for a little bit of leeway, also the 0.618, giving us an area between the 1st of September 24, 1st of March 25 and October 2025. If we then look at the price for this potential wave 1, we also have to look at the previous targets of the previous wave 1s. You can see that the yellow wave 1 is a little bit shorter in price compared to the red wave 1 on the logarithmic chart. The 0.618 almost got tapped, taken from the low to the high of the red 1 to the low of the red 2. But you can also see that the green wave 1 again is shorter than the yellow wave 1 on the logarithmic chart, with this 0.618 taken from the low to the high of the yellow 1 to the low of the yellow 2. So therefore the 0.618 here is an important target at 100k, 104k, but also just again for a little bit of flexibility, the 786 on the chart, which gives us a target between 100k and 180k. If we then go to the macro bullish scenario, we are looking at that latest bull market and bear market, right? We have a 5-wave structure to the upside, finishing the green wave 1, WXYXZ to the downside in this wave 2, bouncing almost on the 0.5, and then we're looking for a wave 3 to the upside, where of course we want to see impulsive moves to the upside. If we then zoom into this structure, this is currently a very interesting scenario for the bullish macro scenario as well, where we then have to combine this with the volume profile of this range in 2021. What we are looking for here is a wave 1 to the upside, a wave 2, followed then by a wave 3, 4, and a wave 5. Typical range trading would suggest that we don't just go through this range to the upside, but that we will spend some time throughout this year in this range, basically between 50k and 30k. And of course, deviations are a possibility, like for example here with the potential wave 5 I have on my chart. So here we could be looking for a potential end of the wave 3, hitting the value area highs, as well as the 786 over here, and on the logarithmic chart it's the 786, but on the linear chart this is also the area of the golden pocket, so some solid resistance there. Then we are looking for a retest for potentially that point of control over here at 38.7k, before then another move to the upside to finish wave 5. This wave 5 then moves above 50k, which is very interesting from a psychology point of view, also with the ETF and news and greed, because people will be looking for the all-time high. So there's liquidity increasing in this area here as people buy, right? Potentially missing out, but instead we're going to go down for a wave 2, where preferably this wave 2 is going to be deep and scary to the downside. The higher this wave 5 and therefore green wave 1 is, the higher these fibs will be as well. These fibs are taken from the low to the potential high of 5, and you can see as well here on the logarithmic chart, but also on the linear chart, how the fibs move to the upside as price does. And here on the linear chart you can see that if wave 5 ending the green wave 1 would end around 52, 53, let's say 55, 56, maybe the 786 even at 57, that the common target for wave 2 is entering the range because the common target area for wave 2 is between the 0.5 and the 786. And you can now see that the golden pocket here is in confluence with the value area low and the big support resistance area here if price can make it to around 55 to 57k. But of course we have to wait and see what happens locally, which is what the daily update videos are for. Now the second scenario I want to share with you here on the daily chart is then a double 1-2, which arguably is more bullish because instead of ranging for a long period of time between 50 and 30k, you're going to move down once for a wave 2 before then a big impulse to the upside in a wave 3. In this scenario, this wave 2 retraced to the 0.382 Fibonacci taken from the low to the high of wave 1, which is a less common target for a wave 2, a bit more common for a wave B, but it is still a target for a wave 2. Because this wave 2 is so shallow, I would prefer the next wave 2 to be very, very deep. Of course, we are not yet sure that the end of this wave 1 is in, right? With the daily updates, we always follow price action locally, so there's still the potential for this wave 1 to move up. But as it stands, with the fibs and the targets for this wave 2 pulled from the low to the high here, the target area for your wave 2 would be between the 0.5 and 786, which is between 37k and 30k. The 0.382 is a less common target for wave 2, that's why it's orange at 39.9k, and the 886 is a very rare target for wave 2, it's almost like an invalidation at 27.6k. Also preferably this wave 2 ends after the 0.382 fib time taken from the low to the high that we have at the moment, where the 382 is currently sitting on the 27th of February 2024. If we then go to the cycle bearish scenario, then we are looking for a finished impulsive structure to the upside. Wave 1 is in, and we are looking for a multi-year bear market to the downside. Now what is interesting here on the monthly chart as well is that we do have a little bit of an order block here, which is where we are at the moment. We are ranging inside that area, so that acts as a little bit of extra resistance besides the golden pocket and the value area highs that I have just shown. But in this scenario, before taking the high, we want to see price moving to the downside once again, where for me the 0.236 would be like a maximum target for this wave 2 at 6k. Also on this chart you can see the fib times taken from the beginning to the end of this wave 1, and also here preferably this wave 2 ends after the 0.382, which is then after September 2025. I also put the 0.236 in as it is still a common Fibonacci target, just to have it on the chart, which is sitting in April 2024, which would be very short term, of course. If we go to the macro bearish scenario and we zoom in to the latest moves on the chart on the weekly time frame, then here is what we are looking for. We then have our wave 1, 2, 3, 4, 5, the latest impulsive structure to finish the red wave 1, and now we are looking for a multi-year bear market to the downside. Of course, arguably we already had a big move up, right? But we are looking for another move to the downside. The big resistance here is the golden pocket to the 786 area, which is where we are at the moment. Also in confluence with that volume profile once again, right, where the 786 is in confluence with the value area highs here, and the golden pocket in confluence with the point of control. But now we are on top of the golden pocket, as you can see, with the 786 just above, and still more resistance here as well. It's not like if we pass the 786 at 50k we can just go for new highs, right? There's a lot of resistance still above, but this is definitely an area of interest. In this scenario, we are looking for price to lose this very important support resistance area between 32.6k and 28.8k for another impulsive structure to the downside in a wave C. The biggest support to the downside is between 11k and 8k, where we have the golden pocket taken from the low to the high, as well as the value area high of this multi-year volume profile sitting at 9.7k. If we then zoom in to the bearish structure here to the upside, we have to look for a 3-wave move inside of this wave B, which is then an A, B, C zigzag. 5-wave move to the upside in A, 3-wave structure in B, reaching the 0.382 Fibonacci from the low to the high of A, which is a common target for B, little less common for a wave 2, increasing the probability slightly of a potential C to the upside. The most common target area for your wave C can be seen over here between the 1 and the 1.236 is most common, but the 1.618 is also still a common target for a wave C, sitting at 50.1k. If I switch to the logarithmic chart, however, then you can see that the targets for this wave C are much higher. The 1 to the 1.236 is now between 50k and 59k. However, what I don't like on the logarithmic chart is that the 382 is now not touching the lows over here. So this wave B did now not reach the 0.382, which is not something I like to see. So if price is moving to the upside to these levels, it might increase the bullish scenario, the probabilities for the bullish scenario. So if we then talk about the probabilities of the different scenarios, then on the cycle and the macro time frame, we are continuously observing the price action between 40 and 50k. We have to wait for a rejection at some point and more confirmation on the lower time frames to really think about a very bearish scenario, right, where we look for a wave C to end and then a big move down below 15k, or we are then continuing a range between 50k and 30k before then continuation to the upside. It really depends on the local price action, which has to do with the local or the short-term daily updates. On the high time frame, which is the daily chart over here locally, the fact that price bounced on the 0.382 here does increase the probabilities slightly for a potential wave C, just because the 382 is a common target for B and less common for a wave 2. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.